So welcome to another market recap. We're going to go over all the trades that we've just taken this week. We're currently sitting at minus 6% for the full week, with Euro Aussie running currently at 3% right now. So overall, the markets have been just really choppy. They've been back and forward. They've not really been moving too much in a trending fashion. And what's happened because of that is when we were holding on positions past that first initial push phase, we're coming back into the pull phase. The pull phase is retracing all the way back down. So what we are going to do is break down all of these trades that we've done so far this week. Gold was plus 2%, so we'll start off with that, and you can see right now we're in Euro Aussie. That's currently starting to retrace now, and I do think we are actually going to see some buyers pick back up in the market, which would be helpful. Considering it crosses the non-dollar based pairs, they're just moving sideways, and if they are moving, they're coming right back down to where they actually started. So if you are holding on, hoping to get a trade in a mid to short term trend, it's just really not working. It's slipping back down and it's coming right back to where you started. So let's go for gold. And that was plus 2%. Then we had NZD USD minus 2%, NZD CAD minus 2%, USD Swiss minus 2%, and Aussie NZD minus 2%. So let's see if we could go out to the 4 hour and find out this trade that we actually took. Again, you can see the idea of what we were actually looking for here, but things just weren't moving, and things just still aren't moving. It's been like this for the past day or so. To be honest, we were just expecting price to go all the way back down to the bottom here, where you can see our take profit is 1860.119. And it could not have moved any more sideways, but nonetheless we managed to get 2% out of that, so that was good. So we've got our 2%, but we did have quite a few losses. We had 4 losses in a row at 2% risk, so that's an 8% minus the 2% gain that we had, so overall minus 6%. So if we go to NZD USD, let's see if we can break down and see exactly what our thought process was going into this trade. So yeah, I mean, you can see here we were probably just a little bit early. We actually tried to enter in this part of the market here. So if we take the replay tool and we just put it somewhere around here, say here, and then if we change time frame, because our entry time frame is the 1 hour, so we wanted to go back and figure out what was the entry candle. If we could go back and see it again, let's just play. So the entry candle was actually this candle here, because we had respected this trend line very accurately, but we also created a triple top, and then this was actually the engulfing candle that led us to get in the trade. But as you can see here, what happened is we came right back up to where we started. We actually pushed through, and then if we play that even further, you can see that we were susceptible to a little bit of market manipulation. This came back down underneath that resistance zone. Now you can see that coming back underneath. We've respected it, and look what happened. We pushed up, closed below it perfectly, and now we're starting to move in that bearish fashion without us. So again, it's been a real indecisive and choppy market. Things have actually moved in the direction that we wanted them to move in, but just not at the time that we wanted them to move in. And right now is what you're seeing is the analysis playing out, but it's actually played out. This could argue that this is a head and shoulders. You've got your head here, your shoulder, sorry, you've got your head, and then you've got your other shoulder. This actually could present itself with another trade, because if this was, if you said for example that this was the neckline, let me see, if we drew a neckline on this, we could say, right, okay, this right here is the neckline. So we have that break, that retest in a zone like this, and then that push down further. But the only reason we wouldn't consider something like that right now is if you know when the trend line does get broken, when it comes back down to retest, it can act as support, and that's exactly what's happening now. So we don't know how well this is actually going to hold, and it's all about probabilities. What's the probability of that hitting the trend line again and then bouncing back up right to where we started? Probably high, considering that it's been respected right now, but again, it would determine, our bias would be determined by what actually happens when we come back to retrace this big bearish engulfing candle, because if you come back and maybe find a little area of resistance in here, then maybe we could go short. But again, right now, nothing really that we want to be looking at. So 𝗙ន់𝗙 was another one that we had. There was another one that we had hit our stop loss minus 2%. And you can see what we were looking for here. We were looking for that break of the trend line. We had broken this zone here. We had broken this trend line and we'd broken above this zone. And normally what we say is you want price action to be coming past the zone quite considerably, and then having a few candles like this and then coming back down to retest and not retesting immediately. Now what happened is we actually did push just a little bit further past it, and then we had this small tiny little retracement, and we entered on this candle because it had, you know, a decent sized wick. It was on a very well respected area. If we sort of scroll out here, you'll be able to see exactly the zone that we were covering here. We had multiple touches to the left in the form of support and resistance, so it was a really well respected level, and it was being respected more recently. So we thought that once that trend line had been broken, we could maybe find some more buyers on that small pullback. We got that wick right on the very edge. You can see here it was on the edge of the candle body, and that's exactly what happened here, which was another confluence for us to get in that trade. But we actually did, like what we were speaking about at the start of this live here, was when we were holding on trades, they're coming back down to where they started, and now even to our stop loss. That's exactly what happened. We were in that push phase, held on for the pull phase. It pulled way too hard, it retraced, it broke this low that we actually got in on and hit our stop loss. So we were actually in, I think, 4% profit on that and ended up with a minus 2%. So with the market conditions right now, they are getting a lot more, they're getting a lot more erratic, and they're getting a little bit shorter in their cycles. So it might be something to bear in mind when you are holding trades and looking to get in other ones. If the profit is there and you have had that good push phase, it might be a good idea to take your profits and run right now. But again, monitoring the market and knowing when to adapt is absolutely key. So 𝗙ន់𝗙, that was USD Swiss. Yep, so that was pretty much, but there might actually still be an, just based on this 4-hour candle here with the buyers showing so much domination, that things might actually, especially now that we're having sort of like a small retracement on this 4-hour candle here, we might actually be able to get a buy position. But as you see here, this is what we were looking at. We had that, you know, touch here, we'd got in, and then we sort of pushed just lower after hitting the edge of the top of that descending wedge pattern. But it might still be the case that we're able to get a buy position if we do manage to retrace slightly, not retracing too much, but retracing somewhere into this zone, not going past this bullish candle, and maybe getting a good entry signal. We might actually be able to still make this trade work. But that was the trade idea. We got in, and then as you can see, we hit our stop loss, so that was US dollar Swiss minus 2%. And now it's Aussie NZ dollar, Aussie New Zealand dollar for another minus 2%, so that was the full minus 6. So again, in fact, let me go back to US dollar Swiss, and we're going to put that on, we'll put that on the ready to enter list, so we know that if we do manage to get that entry signal and we do get that retracement that doesn't consume that bullish candle, then we might actually be able to get in that trade. So that's that added. Right, so let's move on to Aussie NZD. Again, another good trade, but just hit our stop loss again, because the idea of the trade was, we've seen that double top where it actually pushed lower, and then we came back up that one last time. And if we zoom out a little bit, we'll be able to see what trend line we're actually looking at. But we came up one last time, we respected it one last time, and then that was enough for us to get back in that trade, because we do feel like we could have seen price action coming to the bottom of this base here, where we seen that low at on the 28th of May 2021, and now, as you can see here, ever since, we've just been in a bullish rampage, and we've now actually just broken through that trend line, and it could open up some good buy opportunities all the way back up to 1.09329. You can see where the arrow's pointing, so a good area of support to then take that back up to 1.09329 or somewhere thereabouts. It'll never be that exact, it'll be a zone, would be where the trend line that has just been broken meets the support zone, right? So we are currently on the daily right now. If you go back down to the hourly, let's see if we could try and find, because right now we're looking at that analysis was to go short, that's analysis was to get in a sell position. It didn't work, so now instead of just disregarding this, you're now able to benefit from an opportunity in a buy position if you're able to flip your perspective and you're able to shift your analysis, and you're able to not get emotional and rush into now a buy opportunity just because you lost money on a sell opportunity. It doesn't work like that, but that's probably the best possible way to look at it in order to get your money back in a surefire way without being emotionally attached to the point where you're just going to dive into any trade because you feel spiteful that the markets took your money, because it's most likely your fault anyway. But if you can flip your bias to looking at any trade, as it doesn't matter if it's a buy or a sell. Yes, you may have spent a lot of time setting up analysis for a particular buy trade and it didn't actually play out, but don't miss out on that sell opportunity now because you're pissed that the buy opportunity didn't play out. And because 9 times out of 10 your analysis will be probably spot on, but unfortunately it will never go the majority in your favour of your analysis just because it was right. The market has to be profitable, and it also it is ran on other humans making decisions that are of course going to be irrational. So if we were to find a spot right now that's going to be a good support zone, we want to be trying to match it up, because we do feel like when price action breaks certain patterns, when it breaks certain trend lines, it will come back down, typically speaking, to retest that area to, one, confirm the break, has it been confirmed, and two, how much has the break been confirmed by, based on the reaction of the retest. It could be market manipulation, it could be just a liquidity probe, but something along the lines of this being pushed up, coming back down to an area, let's see, get rid of that. So typically speaking, if I was to because we have created that mini support zone that was resistance, is now going to be tested as a naked level because it's now been broken. It will be tested as support, and if we do not respect that as support, do expect price action to come back down and retest the edge of that broken trend line. And if we do get respected on this zone, then we can maybe start looking at a buy position. But a trend line like this is incredibly steep, and it's a good indicator that it will be broken soon. So it might be the case that we do break through this, and then we maybe get something along the lines of, let me see, something along the lines of this might make more sense, because we've come back down, we're retracing, we do find buyers in this area now here, and that's where we then take off from. So on Aussie NZ dollar, I know that was one that we had hit our stop loss. That's what we're looking for. But now we are looking for a buy opportunity, and the buy opportunity would be somewhere, from what I'm seeing just now, somewhere in that region where you see the support zone meeting the trend line, coming back to retest and confirm that the buyers have taken control and that we are going to drive the price action up higher. So that would be what I would be looking for that, just right in here. And that's what we'll continue to look for on Aussie at the end of the day. Let's put that onto the watch list, because it's a trade, but it needs a little bit of development. Okay, so that's us got that there. So right now we'll break down one last trade, and it's currently the trade that we're in. We were in a Euro CHF sell, and we were in a Euro Aussie buy. But just by going off the current, Euro was pretty strong, so we decided to cut the Euro CHF sell position, and we decided to keep the Euro Aussie buy position. And currently, right now, that was in 3% profit. Now we're on that retracement. We're probably sitting at about 1% profit now, 1.5%, 2% profit now. Sorry. So now this will be that position that we hold for the rest of the week. There's not really much setups that we are seeing currently right now. The market is a bit wishy-washy, going from left to right and not actually making any good quality setups that are trending. So we might actually make this our last trade of the week, depending on what setups form. But right now, this is what we have been looking at for Euro Aussie, and we do plan to take it back up to the highs around about 1.58351. And you can see here, this is exactly what we were looking at. Now you can see we have broken this double top here, which is a good sign, and we are starting to find what looks like a little bit of support round about that support zone that's now being retested. So hopefully we can start to find some buyers and make that next push phase up, and then continue our way to our target. Minus 6% for the week. You know, one trade like this could easily bring all that back and some profit, and then if you get another one on top of that, you could be plus 6%, 8%, 10%. So just because you have a couple of, doesn't really matter, because if you have strict rules for your risk management and you look for